Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, June 29th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. This is a look at the ES in the daily time frame here, and this is on a Monday ahead of a holiday shortened week here. Friday is a holiday in the U.S., observing the 4th of July holiday, and on Thursday we will have non-farm payrolls, NFP non-farm payrolls there. So that will be on Thursday instead of the normal Friday, on the first Friday of the month, since that is falling on the holiday. So right now what you'll see in the ES at the moment is that we have had a prior week that ended quite a bit lower here. We had lower highs and lower lows day over day. There was one day here, Thursday, that looked like it had a shot to bounce, at least back up toward the middle portion of the range, if not higher, and it failed. It failed especially late in the day. And now what you're seeing is a pullback here early Monday, Sunday night, a little bit of a pullback off of the previous week's low. However, we haven't gotten the lift off that low like we had in previous weeks. For example, this was a previous low here on a Monday and we got a lift. This was a previous low on a Monday, we got a lift. Right now we have seen it push higher off of the previous week's low, but it's only basically built a range down here and hasn't really been able to get going to the upside. In order for the ES to really get going to the upside here, to be another kind of pattern on a Monday, how we've seen over the last couple of Mondays, we would need it to start getting through 30.30. If it can start pushing through 30.30, it opens up 30.60 above, up to 30.60 to 30.77. Any failure to get above 30.30 could open up quite a bit of weakness below, especially if 29.90 gives out. So right now, again, that's going to be the zone to watch, 30.30 here. Any failure there could open up some weakness ahead. And again, keep an eye on this key range here. This key range that has been in play, we have built out around the center of that range. If we're breaking down to the downside, then the bottom of the key range, 29.2275, could be in play, followed by the extensions down below. This one's 27.70, and then you have one even lower, which would be the 100% target. That's 26.16. So if we do break to the downside, we have the potential to see some major targets reach to the downside. Now, where bulls would come in and defend would be below this low. So there is a potential to drop below this low, again 29.2275, and trap, say around 2900, and that could provide a bounce back to 30.77 half, or maybe even across the range, 32.31s. But right now, everything appears to be flowing to the downside toward that 29.22 level until proven otherwise. So we'll continue to watch that here. Unless 30.30, if price can push to that zone, it opens up some upside. Let's take a look at the NQ here. The NQ also has a very narrow range. The 30.30 equivalent for the NQ is 9,900. If it can start pushing through 9,900, it opens up some upside back toward 10K, perhaps as high as 10,060, which is the previous week's midpoint. Now, overall, this market, again, has formed a range at lows and hasn't been able to see much lift here off of those previous week's lows, which tells me here that we could be getting heavy down here, and any buyers that have come in to lift, if they don't get paid, the downside sell stops come out, and we could be looking at more weakness ahead. So again, price needs to get above 9,900 in order to start squeezing. Otherwise, a failure to do so, or a failure to hold above 9,900 should it try, could open up quite a bit of weakness down below. 9,600 could be the next major target down below in that case. And based off the key range here, we've been talking about this key range high and how it rejected, and now we've gotten very close to that mid. The mid here, 97.61s. So that right there could be hit today. And then if we start to push to the bottom here, at least a retest of the lows would be 93.68s. Again, that would be a spot for bears to look. If they get sell too late here, they could get trapped, and we could see a reversal back toward 97.61s. So we'll see how this develops here throughout the session here, but if it can't get above 9,900, we could be looking at a push lower. All right, let's take a look here at crude oil. You'll see with crude oil right now, this one has rallied overnight, had a pretty solid failed low that developed in the 60-minute time frame and rallied back toward 39.15 or so, The high today is 39.12. But what we're seeing right now is quite a turnaround here off the highs across the board. ES, NQ, YM, crude oil turning around here in this hour. And what we're seeing again is a failure to get going through these highs. And we talked before about this high here and the 40 halves. Then I talked about the 40 level being important, and we dropped down. Now 39.5 was our key level last week. If we can't get above 39.5, we may be looking at a 34 retest. And so right now we have a very narrow range that's developed over the last 3 sessions, or currently developing over 3 sessions. We'll see if that leads to a rotation lower, or do we finally get a break to the upside. 39.5 to the upside opens up some upside expansion. You can see here very narrow 3-day range. 4.5 points of expansion could be seen once we get a breakout from this range. Do we see that move downward toward 34s, or do we see a continuation up? Right now 39.5 is the key level to watch the upside. Lastly, taking a look here at gold futures. Gold, you can see here, I mentioned the previous session that while we have rotated down off the highs here, the 1750 to 1760 zone was going to be very important to watch for a retest, because it appeared that we finally got a breakout right there. We finally got a breakout from this 3-month compression right there. You could see how fast the 8-period average was coming into play. And I mentioned if prices can reject there, that could be a pretty strong showing for a continuation higher toward our next target above, 1831. 1800 would be here. It would slingshot toward 1831. And then that could set the tone for 3 months of strength toward 1957s. So right now, this midpoint retest could be in play. Anything down into 1770 might be in play. The previous week's midpoint is 1770.1. So anything down into that zone could be in play. But right now it might be as much as you get before we start pushing higher here. And again, we're looking for a move toward 1831 off of this low right here. Again, you can use that pivot low and project higher average monthly range. We can use this with the PivotBoss pivots by going up out to the options expiration week. It'll use this current pivot low right there, and now we can look to see, projecting higher, that based on average monthly range over the last 10 months, we may be able to see an easy move to 1845 over the next month of trading, with a 100% target at 1876. So from this low, based on average monthly range over the last 10 months, over the next month we could see a move somewhere between 1845 and 1876. Again, if price can continue to hold above 1760, 1750, this thing has a really good shot to explode higher over the next month. We'll see how this continues to play out. All right, that is it for now. Again, this will be a holiday shortened week. With Friday being a holiday here in the U.S., we'll be in the trading room throughout the week. So good luck, trade well, and I'll see you in the room.